In history, we have seen central banks fiddle with interest rates. Over the last 40 years, interest rates have fallen further and further. Today, we have global central banks going to historic lows, never to return again until inflation becomes excessive. Many have gone to negative territory, knowing there's really no turning back. You came here for the truth, so let me unveil that for you. I have an interesting video today to really look at some of the detail that I haven't been able to over the last little while. We're going to be covering what's going on with the central banks, of course. I'm going to be detailing all of that. Let's get into it. It began with 75 basis points from New Zealand, ended with 50 from Mexico. This week has seen an unprecedented 39 interest rate cuts globally after these central banks slashed their benchmarks, an emergency move aimed at combating the economic meltdown. Imagine in one single week, 39 interest rate cuts. This is a move we have never seen before. We're going right now down to the ground. This is what all central banks are doing because they all need to keep up with each other. It is a spiral downward further and further and further. Where it goes, nobody knows. Many of the central banks went further than lowering borrowing costs, often now at record lows, and activated playbooks from the financial crisis, buying bonds, intervening in currency markets, and setting up emergency loan programs for banks and companies. They cannot keep this up. They are already at or near zero in many cases. Negative rates pushing it through the ground. That doesn't work. Look at the examples that we have. It has not been successful, and it only makes matters worse because you can't come back up very easily. So what do? Well, they have to do what they always do: print money. Quantitative easing is what Japan is doing and all the others when zero just doesn't do it anymore. Imagine the lengths that they've gone to with their interest rate policies, with their QE policies, with bailing out every part of the financial industry, and still it's suffering. You look at the bank indexes over this period, it's been volatile up and down, but right now, many of them are at historic lows. We are expecting that there still is downside, so imagine how low can this possibly go? Look at Deutsche Bank. It was at €5 the last time I checked. Can it still operate at zero? At some point, it's going to be zero, and it's just going to be like, well, close your eyes. You didn't see anything here. Let's keep it moving. It's crazy. Emergency action. More than 36 central banks cut interest rates this week. You can see the breakdown here on the map. All over the world, they've done this. Some have done it the week before. Others will do it next week. It doesn't really matter. All that we need to know is that central banks are all going in the same direction. Down, down, down. Big cuts. Through late afternoon on March 19th, Asia Pacific central banks already had cut their benchmark interest rates in 2020 by almost as much as all of 2019. May I remind you, we are in the third month of the year. A long way to go. 2019, 710 basis points. 2020 year to date, already 625 basis points. I give you all the central banks down here, but understand, it's basically all of them. They're not done yet because I think a lot of central banks are actually going to go below that zero mark this time around. It's not just going to be a couple. I'm interested to see how bad this really is when many of them move in that direction. Bank of America tallied all of this up, and it's a really fantastic chart for us because it's going to break down everything. The font is small, but you probably will have to go in on your own time. Either pause the video and zoom in or use the link in the description. Essentially, the left-hand column, we're looking at the different country, the fiscal stimulus, the percentage of GDP, the rate cuts, the actions that they've taken, and the fiscal stimulus as well. So you could just look at this one chart, you get a snapshot of everything that's happening. Of course, it shouldn't surprise anybody that they're all going in the same direction. Towards the top of the list here, we're looking at China, Germany, France, the IMF, US, Canada. All of them are putting out a lot of stimulus. This goes for the total amount, but also in terms of the GDP. Many of them simply have no way of ever paying this back. I hope I can find some time to talk further about that towards the end of the video here, but let's move on. This chart is just showing you what we've outlined, global monetary policy rate percentage. It's going down. And you know what else is going down? Something that will surprise many, but if you've been following along here on the channel, we've been noting this, particularly in yesterday's video. I told you where investors were putting their money, and that is cash. Cash is where a lot of the money had been heading. Of course, also technology stocks, everybody's favorite. We've seen a surge in the US dollar specifically, and this right here with the red line is negative yielding debt. It peaked out at $17 trillion worth. Then when everything was so fantastic in 2019 leading into 2020, this dropped down to around 11 trillion or so. Then it surged back up to about 15 trillion, and now today it's at 7.6 trillion. That's still a lot of negative yielding debt, but you can see how this has fallen. It is going down in a straight line, just like the stock markets. We had a record outflow of money finding its way out of the bond market, a record level. I showed you that in yesterday's video. Definitely got to watch it, but it's interesting to see it when we look at the negative yielding debt. And it's not just the governments that do negative yielding debt, it's corporations as well. Corporate negative yielding debt, the same situation is happening. It is much smaller than what we saw with the sovereigns, but no doubt it is significant. But the rate at which people are leaving this is definitely noteworthy. Look at it. It went up in a hurry. It's going down in a hurry as well. Here's a breakdown of the G7 fiscal policy initiatives, March 2020. On the left-hand side, you get the country. In the middle, it tells you what they're doing. On the right-hand side, gives you the totals. I'll just give you a couple things to look at. Each country is going to do their own thing. Each country is going to have their own sectors, their own industries that they really want to protect. Whether it's like France, which they suggested that they're open to nationalizations, probably will happen if things get worse. Stimulus packages in Italy. Japan, who recently increased taxation, is talking about cutting taxes. And the fantastic stimulus package in the United States. We'll talk more about that in a second. All governments around the world have to, quote unquote, act. They can't just sit there, they need to act. Of course, they created the problems in the first place. The economic conditions that led to the exaggerated asset prices are all here because of the super low interest rates, because of what governments have done. But now they could come in, bail out their friends, the CEOs get the bonuses, the buybacks will most likely continue, and everything goes back to status quo. Germany eyes 156 billion euro of new borrowing, 200 billion euro in debt authorization. It was a surprise because they were generally seen as the ones who, we don't want to go this far, we don't want to go in that territory, we're going to be very fiscally responsible. But they needed to join the pack. Everyone's doing it. Got to be a team player. Larry Kudlow says the relief package will be worth more than $2 trillion. This thing continues to grow. Every time I look at the news, the number gets bigger. Before, it was in the billions. Then it moved up, then it moved up, then it was 2 trillion, and now it's more than 2 trillion. By the time this thing gets signed in, I have no clue how big this thing is going to be. It's gargantuan. You're going to get the crumbs though. You're not going to get much of it, but it will most likely be very big. The package is equal to about 10% of US economic output. That's big. In fact, that's massive. It's a major escalation at roughly twice the size of the package the administration requested only several days ago. Like I said, it's growing out of control. But like Chevy Chase in Christmas Vacation, you don't want to spend the money before you get it. Check this out. Here's how your rescue check from the government could be taxed. Wait a minute, what's going on here? They're going to tax me on the money? Well, it depends on how they give it to you. That information has not been confirmed yet. But just that suggestion that it could be taxed, it kind of takes away from the whole idea here. They're trying to, quote unquote, help you out, but that money goes back in. Now think about this for a second. You're already paying income tax, you're paying the property tax, you're paying the sales tax, every single other tax. That money goes towards the government. Then there's a problem, they want to bail you out. So what do? They give you some money back. They give you that money, and then you're paying your taxes again on top of that. Then you spend some of that money at the store, and you're paying sales tax again. Anyway, I think it's just a little silly the way this all works. We'll see what actually comes out, the totals, the size of the package, what people get, and the breakdown of it, because not every everybody's going to get that $1,200 or $2,400 for a couple. There are stipulations there. We'll see what happens. Stocks can return to records early next year if the US can fix the issues that are going on today, according to JP Morgan. That's right, JP Morgan, Goldman Sachs, and all of the other big banks out there were telling you how fantastic 2020 was going to be. One person put the S&P at 3,400, another said 3,500. We had all of these different predictions. We had Tesla stock at 7,000, 15,000. It didn't matter. Just put an extremely high prediction and everybody was jumping on it. Then things changed and suddenly they had to lower all their forecasts, their estimates. None of it is worth anything. Whenever they try to make a prediction like this, run away. Run away as fast as you can. That's all for this video. If you found it informative, all you gotta do is hit that thumbs up button and you're supporting me. I wanna thank you for doing that. If you wanna see original content from me every single day on Instagram and Twitter, the subscriptions are growing there quite dramatically. I wanna thank all of you for checking me out on there. New stuff every day at The Money GPS. If you want to learn how to sell online, right now is definitely the time. There are many courses out there that cost $1,000, $2,000. My course, you can get it for the low price of $0. I don't charge a thing. Check it out at theamazongps.com. Do you want to understand what's going on in the financial industry? Do you want to get that financial education that was left out of the school system? These two books have everything you need. Check them out at the link in the description if you want the audiobook, themoneygps.com. I see the comments every single day. What do I do? What are the solutions? You never help. You never address the situation. They never make it to the end of the video, of course, but I'll say it again. I have a playlist. It's called How to and Solutions. If you click on this, you will see many videos that I believe will be informative to you.